Hello, and welcome to the Japanese Stock Channel. In February of this year, the Nikkei stock average reached a new high, the first in 34 years. Here in Japan, many companies are export-oriented, so the weak yen is boosting expectations for corporate earnings. If you've recently become interested in Japanese stocks because of the yen's depreciation, you're not alone. Today, let's talk about one of the most attractive areas in Japan's market, the general trading companies, or Sogo Shosha. These firms are a uniquely Japanese business model. They play a vital role in daily life, handling everything from clothing and food to energy, metals, and even communication satellites. The five major trading companies, Mitsubishi Corporation, Mitsui & Co., Itochu Corporation, Sumitomo Corporation, and Marubeni Corporation, are household names in Japan. They're also among the country's most popular employers, attracting top talent and maintaining strong growth prospects. These companies have even caught the attention of Warren Buffett, one of the world's most respected investors. Berkshire Hathaway now owns roughly 9% of each of the five giants, and Buffett has spoken very positively about them. He has praised their financial discipline, modest executive pay, and long-term approach to reinvesting profits, qualities that fit perfectly with his own investment philosophy. So how do these trading companies actually make money? Their business model has two main pillars, trading and investment. First, the trading business, buying, selling, and brokering commodities across Japan and overseas. They generate profits through global trade and add value through services like logistics and finance. This side of the business also builds valuable information networks and long-term relationships with partners. Second, the investment business, using their capital and expertise to invest in other companies and create new synergies. Through these investments, they diversify income sources and enter new growth fields that go beyond pure trading. Because of this structure, general trading companies have several strengths. Number 1, inflation resilience. They're highly sensitive to resource and energy prices, so they often perform well during periods of inflation. Number 2, high dividend yields. Most of these companies are mature and financially sound, offering stable dividends, around 3% on average, higher than the Tokyo Stock Exchange's overall average of about 2%. Number 3, attractive valuations. Their average price-earnings ratio is roughly 11 times, compared with about 16 times for the broader market. That makes them appealing to value investors. Now let's look briefly at each of the five major firms. Of course, these summaries cover only a small part of their vast operations. Mitsubishi Corporation, Japan's largest trading company, is known for balanced management and strong performance in mineral resources. It operates across energy, mobility, retail, and more, achieving both stability and growth. Mitsubishi also leads in digital transformation, building an industrial DX platform to modernize entire industries. Mitsui & Co. stands out for its enormous scale in natural resources, oil, gas, metals, and minerals, and its growing presence in non-resource fields like infrastructure, automobiles, and healthcare. It also promotes digital transformation to link data and business opportunities across sectors. Itochu Corporation focuses mainly on non-resource areas such as textiles, food, and retail. It has built one of the world's largest textile supply chains and owns FamilyMart, Japan's third-largest convenience store chain. Itochu's solid earnings base comes from everyday consumer demand. Marubeni Corporation has balanced exposure to both resources and food. It's a major player in iron ore and copper trading, while also being one of the world's largest grain and livestock traders, contributing to global food security. During the Russia-Ukraine crisis, Marubeni benefited from surging agricultural prices. Finally, Sumitomo Corporation maintains a healthy balance between resource and non-resource sectors. Its resource portfolio includes metals and energy, while its non-resource businesses span real estate, media, and digital services. Sumitomo's real estate projects provide stable cash flow, and its digital business shows strong growth potential in online media and advertising. So those are Japan's five major trading companies. They each have unique strengths and stable business foundations that make them appealing long-term investments. Of course, investing always involves risk, and decisions should be made carefully. but understanding these companies can help you see why global investors, including Warren Buffett, find Japan's trading houses so compelling. Thanks for listening. This is the Japanese Stock Channel. See you next time.